From ancient gold to digital coins, this is money history, the story of money told right.
If you think stock market crashes only happen because of bad economics, you're about to get a rude awakening. This wasn't a correction. It was a financial heart attack, and almost no one saw it coming. And the scariest part? It could happen again tomorrow. Picture this. You wake up one morning and the entire stock market is in freefall. Traders are screaming, phones are ringing non-stop. The Dow Jones just lost more in one day than ever before, 22% of its value. Even the analysts on TV stopped pretending they knew what was going on. The textbooks say it was a perfect storm. Overvalued stocks, rising interest rates, and a little panic. They say it was just a market correction, nothing systemic. But that's only the sanitized version, the version they tell in finance class. Because the truth is way more disturbing. Behind the scenes, Wall Street had created a monster, program trading. Algorithms were set up to automatically sell when markets dropped to limit losses. But when everyone's programs started selling at the same time, the market went into a death spiral. It wasn't human panic, it was machine-driven chaos. It's like giving a toddler a flamethrower and saying, "Don't touch anything." And this next part, it nearly brought the entire system down. Markets around the world followed. London, Tokyo, Frankfurt, all in freefall. Banks froze. Investors couldn't sell. People lost their retirement savings overnight. The Federal Reserve had to step in and basically say, "We'll print whatever money is needed to stop this." It was the birth of modern central bank intervention, or, as some call it, legalized market manipulation. Some experts still argue this wasn't a crash, it was a warning we didn't learn from. This was the moment when markets broke, not from a war, not from a crash in oil, but from their own design. The financial system ate itself in real time. If the markets were a roller coaster, this was the moment the brakes failed going downhill. But here's the detail that still matters today. Black Monday didn't just change how we trade, it changed who controls the markets. It led to circuit breakers, new regulations, and ironically, even more algorithmic trading. The system didn't get safer, it just got more complicated. And today, the entire stock market still runs on the same kind of automated systems that caused the crash. Finance isn't built on stability, it's built on confidence. And confidence is fragile. Black Monday wasn't just a crash, it was a glimpse into the future of financial fragility. And if you think 1987 was bad, just wait till you see what happened in 2008.